Good morning and welcome to Cornerstone's exclusive Allstate Rollout. We are still getting set up here. We're having a little technical difficulties, so we may start just a few minutes late here, but we just wanted to let you know that. In the meantime, we can go over a few housekeeping items while we're waiting. If you have any questions, please type it in the question box below. We will answer questions at the end of the presentation. You can connect with Cornerstone, follow us on social media, and subscribe to our weekly Monday Minutes newsletter for the latest Cornerstone, carrier, and industry updates. And if you have not already checked it out, you can check out our new Cornerstone's new AGB portal, your digital broker suitcase. You can go to www.crnstone.com/AGB. And if you have not already registered, please register for our 2022 Cornerstone Broker Contest. You can earn up to $7,000 with Cornerstone's Cash Incentive Program. Earn more when you sell more. For all group and individual new business sales between January 1st, 2022 and December 31st, 2022, you'll earn points that will bring you closer to a $7,000 cash prize.
Just wanted to make sure. All right. Hi, everyone. I don't know if Nelson already introduced us or not because I did miss the first part of it trying to jump on here. But my name is Jaclyn. I am the small group sales rep that you will be working with on any groups you need. And then Ryan, who was just speaking as well, is going to do anything 51 plus. And then I would be 2 to 50. So just kind of to start off here, let me see if I can change my slide. There we go. Just kind of our agenda today of what we're going to be talking about. So just a little bit about Allstate benefits. We'll be talking about a little bit of how you can control your healthcare costs, some group medical solutions, some plan enhancement we offer, and then our pharmacy benefit manager. We'll kind of be talking a little bit about the RFP process and what happens after selling a group with us. And then if you don't mind, because we do have quite a bit of content to cover, if you could just reserve any of your questions until after the presentation. I'm not sure, Nelson, with this, is there a chat box that maybe they can submit questions to and we could follow up with them after, or
yes,
something along those lines?
There is. Yeah, that's one of the things we covered while you were still logging in, so we should be good there, and we'll reserve all questions till the end.
Okay, great. Sounds good. So just to kind of start off a little bit about Allstate. So Allstate Benefits acquired National General about 2.5 years ago. And we still specialize in employer group health products, and we continue every day to strengthen our product lines and services with competitive and flexible options for multiple different employers. And kind of, as you can see on this here, one of our major strengths behind our programs is that we are a Fortune 100 company. We are A+ rated, shop on AM Best. And you'll also notice that we too protect 5 of the top 10 retailers as well. And then I'll kind of let Ryan take over here.
Awesome. Thanks, Jaclyn. As Jaclyn mentioned, I am Ryan Clements. I am the mid-market sales rep here. So any groups that you guys have that have 51 or more enrolling, I'll be able to help you out with those. And that is a note to take there, is it's 51 or more enrolled, not eligible, that we do go off of. So before we really get into kind of the details of our solutions, we kind of want to start by just looking at maybe really what we would call some of the issues with the fully insured market, because most of our clients are coming from a fully insured contract into either level funded or self-funded with us. So what we want to do is really identify what the problem is, so then we can obviously talk about ourselves as a solid solution. So what we're really trying to do at the end of the day is give more control to your group as for their healthcare costs. And when we say healthcare costs, we're talking about premium costs as well as actually cost of claims. You really don't have a whole lot of control in the fully insured space. And we'll kind of talk about why that is here in the next few slides. So to start here, this does say challenges for mid-sized businesses, but really I would say this would hold true for any size business. These are challenges they're faced with today. First one is endless price increases. Fully insured market is well known for increase after increase after increase. You basically just hold your breath every year and hope that you get a good renewal. And if you don't, you know the drill. You're going to be shopping, possibly moving the case. That's a problem. Endless price increases. The other problem is inflation outpacing wages. These slides were kind of put together before the inflation that we are dealing with now. When you go back, let's say 4 or 5 years ago, and think about how much healthcare costs back then versus now, employees are not being paid a whole lot more than they were 5 years ago. So any gains they're making are being eaten up by their healthcare costs. The other problem is you really have no control over the actual cost of care. You really just have to pay what the provider tells you to pay. And that's something that doesn't really exist in any other market, where you just basically pay what they tell you. And you don't even know the cost up front. Imagine buying a vehicle that way. You go in, you pick the vehicle you want, you sign up for it, and then they tell you, they bill you for it. That's basically how healthcare is right now in the fully insured space. You have no control. And then you also have little transparency. You don't know where your money's going when you give it to a fully insured carrier. You don't know what your renewal or why your renewal is what it is. So you're really just kind of left in the dark. And then what some of the solutions are if you stay fully insured, and we've seen this over the past 4 or 5 years, is groups are reducing benefits, which one way to do that is to rise or raise your deductible. So we're seeing rising deductibles because groups that want to stay or think they have to stay fully insured, they don't see any other option other than to reduce benefits in order to keep the cost down. So what you're faced with is a message to employees is, hey guys, sorry, we have to raise your deductibles, and also your pricing is going up as well. Not a very good message being delivered to employees right now. You can go to the next one. So talking about fully insured is really the issue that we're trying to solve here at Allstate. And we would look at it as it's really a Band-Aid. It's not a solution. You're basically just covering up an issue for the next 12 months, knowing that you're going to have to deal with it in another 12 months. That's basically what fully insured is. It really is a rat race. It's just a reset every 12 months. You're lucky if you get a single-digit renewal. Most of the time, the renewals are double-digit, and you have to send it out. You have to shop it. You have to share that information with the current carrier, then see if you can get the renewal to come in just low enough, and you have to do that every single year. It wastes your time, wastes your group's time. It's really just not a solution. It's more of a Band-Aid. You're just covering up a problem until you have to deal with it about 12 months down the road. Part of the issue here, and this is one of the biggest problems with fully insured, is there's no paralleled incentive from the large fully insured carriers. And I'm going to go back a little bit about, we're talking about ACA, the Affordable Health Care Act, when it was passed essentially a decade ago. There's something called the medical loss ratio. I'm sure we've all heard that being in the industry, the MLR. And basically what the MLR was introduced for was supposed to be able to essentially prevent these large carriers from taking basically very, very large profit numbers. It basically said if you're a large group or mid to large market group, the insurance carrier had to pay 85% of the premium back in claims. They can only keep 15% profit. So that sounds good, right? You have to pay 85% back in claims. Well, the problem it created is now the insurance carriers, the large fully insured carriers, they don't have an incentive to keep your rates down because they're going to get 15% of a larger number as long as your rates are going up. So if you think about that for a minute, they really don't care if your rates go up, and they don't really care to help you manage your risk or manage your health care or manage your claims so that you can keep the claims down. It actually benefits them when you actually pay more in premium. So that's quite opposite of what we're going to be showing you here about our solutions. So I just wanted to identify that is a major problem why the fully insured carriers, there really just is no incentive for them to keep your rates down. And the next slide here will kind of show you why. This is just kind of a graph to show you what happens in the fully insured space with your customers or your client's premium. The customer's entire premium is paid to the insurance carrier. They have no control over how the money is spent. And in years when their claims are less than expected, the carrier keeps all the profit. So if you look here over the course of 5 years, let's say this group, 3 of the 5 years, they actually ran pretty well. They're not getting any of that reward. They're not getting rewarded for running well. The insurance carrier is keeping all of their premium, and they're most likely raising their rates as well. If you were level funded with us or self-funded with us, you would have been rewarded, and you would have either gotten a refund back if you were level funded, or you would have never had to spend that claims money if you were self-funded. So really, the fully insured market is designed for the large carriers to win. It's not designed for your groups to win. They're the loser every time, regardless. So this is just kind of a snapshot of what the premium would look like over 5 years, potentially on a level funded contract where we do set up refunds, 50 to 100%. We don't require you to renew to get that refund. We'll talk about a few of these things later. But essentially what we're trying to do is not take all of your clients' money and hold it. We're trying to take it and then figure out the best way that we can manage their health care, get the cost down from a premium perspective, give them some control over how they pay claims, and hopefully on the years they do well, they're either not going to have to spend more money, or when they do, we're going to actually give them a refund. I think, Jaclyn, you might be jumping back in here.
Yep. So just to kind of, piggyback off of, what Ryan was saying. So like some of the reasons why, why self-funding. So number one, it costs less than fully insured plans. Employers only pay for the healthcare services the group actually uses. Our plans are going to be underwritten, which can potentially result in lower monthly costs for some groups, especially with the medical risk associated. It's more predictable because you have a predictable fixed monthly payment versus kind of the unknown of, renewals and whatnot. We have robust major medical plans. So really, just like you're fully insured, we can offer any type of like robust major medical plan that the group is used to. You do have monthly payments as well. So you're going to have, all your first dollar preventative care covered by the ACA. And then you're going to have your set monthly payment and know, where your money is going. Kind of another thing is you're going to have that stop loss protection, which I know Ryan touched on as well. So employers are going to be protected with the stop loss insurance that we offer. So if you have any claims that go above and beyond, your total claims fund for the year, that's kind of when we kick in as a stop loss carrier and take over from there. So you're protected on that end. You also have more control over, employers especially have more control over their healthcare costs and where their money's going. The premium, the increased premium on fully insured plans, also kind of what Ryan was saying is, the more money you're paying them, the more you're benefiting them essentially in the end. And then the biggest thing I think is with self-funding is your potential for getting money back. So we have two different ways that you can do that. You can select 50%, getting a 50% of the claims fund back at the end of the year if you don't use everything anticipated in your claims fund. We also have a 100% option, which is going to be a little bit of a rate increase on that end, but that, if the group is really looking forward to their refund or don't think they're going to use their plan very often, 100% might be the way that they go, just because the amount of money that they could get back is pretty significant. And then I just kind of want to touch base on some of the sweet spots that Allstate does offer. So we have flexible participation. We have flexible submission timelines. So, we can even implement 7/1 or 8/1 after the actual 8/1 or 7/1 effective date. And depending on the time of the year, those time ranges kind of change. So I would definitely check in, with your either myself or Ryan, whoever you're dealing with, on what those timelines are. We also do cover 1099. I know a lot of other, self-funded carriers don't. We also have carve-outs. So maybe you just want to cover the management, or you just want to cover the warehouse, or maybe a specific location. It's got multiple locations. You just want to cover, the Westchester location or whatever it may be. You can also do hourly carve-outs. So maybe you want to cover anyone who's above 30 hours. Anybody under 30 hours, wouldn't be considered eligible. We do offer free COBRA administration as well. We do, I kind of already touched base on this, the 50% or the 100% refund. And one huge thing with us is you do not have to renew with us to get your refund if you are eligible for one. We also have aggressive commission on the small group side. It's pretty tailorable to, we do percentage based, but I know a lot of agents are used to PEPM, which is fine. We can kind of compute that on our end for you. So whatever you're used to, PEPM wise or percentage wise, very tailorable to, whatever the agent is looking for. So those are just kind of some of the things. We also have multi-state groups. We do a ton of new industry startups, things like that. Those are just some things that kind of set us aside. So just to kind of talk about some of our plan designs, we do offer over 80,000 plan designs that are tailorable to each group individual. We try to match, if they have a plan currently, apples to apples if we can. Some things may be differentiated between, what they have and what we have, but, with the amount of plan designs we have, we can definitely find something that they're comfortable with and what they're looking for. We have two different TPAs we work with. We're going to have Allied and then Maritime. So depending on which one you work with, you may have a different network. And we usually go with whatever TPA the group, or basically we base the TPA off of what network is best for the group. So Aetna, we have Cigna OAP are the different networks. We have Aetna ASA, and then we also have Aetna POS, and then we have Cigna Local Plus. We also, for some of our Advantage plans, we have Cigna OAP, Aetna ASA as well, and then Aetna POS as well. Just to kind of touch base, Ryan will talk about this more in depth, reference-based pricing, but we do have three options for those. We have Core Value, which is just our traditional reference-based pricing plan. Then we have Core Flex, which is essentially going to allow you to switch to a network plan halfway through if you're not, if you're on the core plan, the reference-based pricing, and you decide you want to change back to a network plan, you have that option mid-year. And then we also have Core Access, which is essentially just going to be a PHC hybrid where you do have network access through PHCS. And then just here really quickly, before Ryan does talk more in depth about reference-based pricing, I just kind of want to show the savings between the three. So you're going to see on the very left, you're going to see our traditional plan. So you'll see like the employee single rate is going to be $384.91. If you did an Advantage plan, which is going to be, our Advantage plan is going to be in-network only, so you won't have out-of-network benefits. Obviously, any type of emergency would still be considered in network. That's going to show you a little bit of cost savings there. You'll see the employee single rate is $364.51. And then we also have the core value, which is just our traditional reference-based pricing, kind of drops that employee single rate down to $313.93. So definitely, different options that you can look into for the groups, whether it be traditional advantage or core, which are traditional reference-based pricing, or maybe a couple of the other reference-based pricing options.
Awesome. Okay. So to get into reference-based pricing, before we kind of go into the details, really what it is in its simplest form, it's just a different way to pay providers. All of us are used to the fully insured plans and the network plans. Networks are obviously just that. It's a network of providers that have pre-negotiated the rates or the price that you're going to pay for a particular claim. All we're doing is looking at what Medicare pays, and we're going to pay based off of what Medicare pays. So at the end of the day, reference-based pricing is simply just a different way to pay providers. That's all it is. You can go to the next slide. Thank you. So looking at it from a side-by-side perspective, fully insured, you do have a network discount. You're going to hear the large carriers brag about, oh, we have such great discounts. The problem with a network discount is it's a top-down approach. If anyone's familiar with a hospital charge master, it almost sounds made up, but it's definitely not made up. It's essentially a large book that every hospital has, and it essentially tells them how much to charge for a particular service. The problem is it's not regulated from hospital to hospital, from provider to provider. So you basically have hospitals making up the numbers that they charge for a particular service. And if you ask them to explain why they charge a particular price for something, they really cannot answer that. They really don't know, because the numbers are basically made up. So the number is highly inflated to begin with. So that network discount that the fully insured carriers may brag about, it doesn't really matter, because you're still being overcharged because the number is so high. So not only is the number high, the number is going to vary widely from one hospital to another. And that's another big issue is, as a consumer, you don't know up front what hospital to go to, because you don't know how much it's going to cost you. Is it going to cost me more to go to this hospital? Is it going to cost me more to go to this hospital? So you're kind of in the dark on what you should do. But the problem is the rates are all, or the prices all start very high, and then they get negotiated down. Reference-based pricing is the opposite approach. We look at what Medicare pays, and Medicare is widely accepted. It's the largest. They insure more people than any other private insurance company. So we basically say they're the largest insurer in the country. A lot of people are using Medicare. It's audited twice a year based on your specific region, and it does determine the fair charge based on cost. So what Medicare pricing does is basically look at particular area and a particular service, and they determine what a fair charge should be. So a provider that's getting reimbursed based off of Medicare, they're actually still making money on what Medicare pays. What we do is look at what Medicare pays, and for outpatient services, we're going to pay Medicare plus 30%, and for inpatient services, we're going to do Medicare plus 50%. So this ends up saving you at time of claim anywhere from 20 to 40%. That's obviously a significant reduction in your cost of claims. And that's obviously going to be cheaper on premiums as well, because we know if you're using any form of reference-based pricing, you're not going to be paying as much as claims. So therefore, you don't have to pay as much in stop loss protection. So that's how we can bring your premium down as well. You want to jump to the next one? Okay, so Jaclyn had talked about core value. You'll see some of the numbers I just mentioned here, the 150% for inpatient, 130% for outpatient. Also, I want to mention here, we'll probably mention it in a few slides, but For your pharmacy benefit manager, that's going to be Cigna. It's not going to have anything to do with reference-based pricing. So this is only talking about your medical claims. So what we're doing is essentially we're eliminating the network. We're no longer saying, hey, you have to stay within this network. You have to see a network provider. We're basically allowing you to see any provider that you would like. And then from there, you're going to run in, and I'll talk about some of the issues you could run into, but essentially our approach is we will work with any provider. So our main kind of flagship product when it comes to reference-based pricing, we call it core value. And what this is essentially all of your medical claims will go through a reference-based pricing approach. So you no longer have any out-of-network penalties. You're not going to get hit with a double your deductible, triple your out-of-pocket. You have one set of in-network or one set of benefits, and that's not going to change regardless of what provider you see. So you're going to see the bottom right there, low balance bill experience. One of the issues you're going to hear being raised about reference-based pricing is what happens if I get a balance bill? Under our model, it really doesn't matter if you get a balance bill because it's literally put in our contract that if your employees get a balance bill, we will negotiate it on their behalf, we will get it paid, and the employee or employer is not responsible for additional cost sharing, which means the employee is only responsible for what their EOB says. The only responsibility the employee has would be to bring that balance bill to us, should it happen. And I'll talk about it in a couple slides here. We have a team that specializes in helping out with that. But it does not happen very often. I'd say probably on average about 3% of the time you're going to see a balance bill. But the best thing about our model is that your employee is not stuck with a balance bill. We're not going to send them to litigation. We're not going to put them in touch with an attorney group. I mention that because there are some other reference-based pricing carriers out there that have models that do not provide that protection from a balance bill. And part of that is because they're just not, they're more TPA ran models where they're bringing in a stop loss carrier. And if that stop loss carrier is not contracted to pay more than 150% or 130%, if you get billed more than that, then you have to get into negotiations to get that bill down. With us, we are the stop loss carrier as well as the program manager. So the fact that we are in control behind the scenes, that gives us the full discretion to negotiate that on the behalf of your group as well as the employees. So our model is much more member friendly. So you really don't have to worry about a balance bill. If it happens, bring it to us. We'll get it taken care of through the MAP team. And like I said, I'll mention the MAP team in a couple slides here. So that's core value. Core access, this is my favorite solution that we offer. It's probably the most popular. I know it's the most popular solution in the mid to large market space. What we do with core value access is we're going to give you access to the PHCS practitioner and ancillary network for all of your outpatient services. And outpatient services are going to be probably about 85% approximately of your claims. So those are going to be your PCP visits, your specialist visits. This is also going to include your ancillary services. So diagnostics, x-rays, labs, there'll be outpatient surgeons, outpatient anesthesiologists. This is going to cover literally probably 85 to 90% of your claims. You're going to have a network the same way you do today. So from an employee perspective, it's going to look and feel like the plans they have today. You're going to have the PHCS logo on your card. You're going to have the information on how to search for providers so you can find a provider. So that's going to be access to a national PPO network for all of your outpatient services. And then we only use reference-based pricing when you have an inpatient hospital claim, or really any claim that was coded as inpatient. Most of those are going to be an inpatient or a hospital claim, and those are going to be the claims that are going to be the most expensive claims. Those are the shock claims, where you get a bill and it's $50,000, $100,000. Those are going to be the claims that we're going to use reference-based pricing to keep those down, which is also going to protect your program, because if you're level funded or you're self-funded, You do not really want to be on a full network plan for every claim, because if you are, it's going to eat into your claims fund and it's going to cost you more money if you're self-funded. So what we're saying is, hey, we're going to give you network access for 85% of your claims. That's what most employees are going to use the coverage for. For those high dollar inpatient hospital claims, we're going to use reference-based pricing to keep those down in order to protect your claims arrangement or your claims funding. That's a very, very nice option that we use. Another benefit to that, I didn't mention it, is that we actually, it's kind of an indirect benefit that happens. You no longer on this plan, how I said you have a network access. If you go outside of that network, we use RBP as a wrap. So you're not penalized if you go outside of PHCS. You're still going to have that same set of benefits that you have if you go in network. So that's a great benefit, where today, if you have access to a PPO plan and you go outside of that network, you're going to get penalized. With us, you're not going to get penalized if you go outside the network. That's a great benefit as well. So here, I'll spend a couple minutes. I know we're getting in time. We want to spend some time here at the end to go over some questions and some RFP requirements. The member advocacy team, we call it the MAP team. Basically, it's your client services that's an enhanced client service provider or offering. Essentially, they can help out with finding low-cost providers up front. So if you have an employee that wants to find a low-cost provider, they want to do a little bit of research, we can help with that. They can proactively reach out to providers to explain benefits, which can help, obviously, just speed things along. We can provide claim status updates, assist with plan questions, and this would be the team that would facilitate any provider negotiations like we talked about with any balance billing. So this is a solid team that's there to help out. And this, I'll spend just a slide to show you that we have flexibility with our contracts. Most level funded contracts and self-funded contracts in the small to mid-market space, they're going to have built-in runout where you have to buy a 1218 or a 1224. We have the ability to carve out the runout cost and then add it back in when you need it. The nice thing here is that if you plan on being with us for quite a few years, which is obviously the reason that you're hopefully going to move to us, is for a long-term strategy, you really don't need to buy runout protection up front because it's just going to cost you money every single year to do so. We can peel that cost off of there or carve it out, and then 3, 4, 5, 6 years down the road, should you leave us, we have options for you to get the runout protection. So I just wanted to note that we do have flexibility about that, and we'll obviously discuss this on a case-by-case basis. Jaclyn, you got anything on this? Is just kind of more of a just kind of group size, what we kind of need for underwriting. In my space, the 51 to 99, I can use medical questionnaires. I don't have to. If you can get claims data, I can use claims data to underwrite in that space as well. And that's kind of what it's saying here with experience data, that we can use experience data in the 51. Obviously 100 plus is going to be basically all experience data, but I think we'll talk a little bit about the requirements here in a couple minutes.
Yeah, and just to kind of piggyback off that, for the 2 to 50 enrolled space, we do have our Simply Underwritten product now, which kind of works a little bit similar to, we would need claims experience and things like that. In those specific states. We don't have it in Ohio at the moment, but some other states close by, like Indiana, Illinois, Pennsylvania, and Virginia. So let's definitely keep that in mind too when quoting groups, something that we can look into.
Yeah, we're lucky in Ohio because, sorry, I was just mentioning that we're all lucky in Ohio because of form fire. Most groups are doing form fire, so we tend to get asked in most cases in Ohio. Where you would see experience data in the 51 plus space is if you have a group that's currently level funded or self-funded, then you should be able to gain access to the experience data from the current carrier. And that's a situation where I would be able to use that data to underwrite the group versus them needing to fill out applications.
All right, great. And then just to kind of touch base on a few plan enhancements that we do offer, we do have MeMD, which is essentially just going to be a virtual urgent care with 24/7 access. It's also going to offer talk therapy visits for members that are 18 and older. It's essentially just going to be licensed therapists that can help you with a wide range of mental and emotional health needs. So that's really great, especially in, today's crazy world. It's definitely helpful to have that. And then we also offer Vitality, which is just kind of going to be more of like a fun promotional thing to help promote healthy living. I think there's like different, things on there that say, challenge you to do workouts every day, and you get points for it, and you can get rewards for healthy activities. And then I know there is like an activity tracker credit as well, that you can kind of link your like Apple Watch or whatever smart device you have, and link it in with that to get points as well. We also have something with Healthcare Blue Book, which is just essentially an program that helps you find low cost, high quality providers. So it'll be like, it'll show you a green dollar sign, which shows this is a great provider. It's low in cost, it'll be a lower claim, versus, it'll show you kind of the more high end ones. Like, so if you went to a pro scan versus going to the hospital for getting, maybe a quick scan on your arm or something like that, or a mammogram or something, it's going to be less expensive at the pro scan versus going to, a major hospital or something like that. And I did add on here too our online enrollment. Just something quick I want to touch base on. Like Ryan said, we are, fortunate that we do have the form fire. I do believe a lot of you have used that when sending groups over to me. But if ever need be, if you do just have a, maybe a virgin group or something like that, or maybe a group that doesn't have applications, we do have online enrollment links that we can generate. All we need to do that is just the normal RFP things you send over with a census and things like that. Once I have a census and everybody loaded into the system, I can generate a link that I can send out to you, and you can pass on to the employer, and the employees will be able to log in. They can even do it from their cell phones or, computer, whatever it may be, and fill out the application that way. So next, I just kind of want to touch base briefly on our pharmacy benefit manager for all of our PPO plans, HSA plans, things like that. It's going to be Cigna PBM. It's the largest PBM carrier out there with the acquisition of Express Scripts. So we're typically able to save about 6 to 9% on pharmacy with their Advantage formulary. So this was just kind of an overview of some of the additional products, we have that we offer in addition to the plan designs and things like that. So here I just kind of want to talk about things, RFP process and things that happen after implementing a group with us. So just to kind of start with the RFP process, and I know I went over this in our last meeting, but I just want to touch base on some things. So when you're sending out for a quote, send it through your normal Cornerstone channel, and then from there, what we need to have illustrative rates are just the census, and then just let us know if they do have prior coverage or what kind of plan design they're looking for. If they have a renewal, send that over, so that way we can try to base the plan design off of what they currently have, unless they're looking for something different. And then for firm rates, we will need a census. And then again, if they have prior coverage, renewal rates are always great. or if a virgin group, kind of what plan design they're looking for, and then just medical applications. So that's what we would need for firm rates. And for medical applications, I can accept multiple different things, paper version, obviously, and I can send that out for anyone who's interested in having it. We also have, we accept multiple different populated electronic apps. Most of the ones you're familiar with are going to be FormFire, or also, like I touched base on before, we do have our electronic online enrollment. So if you guys do need a link generated after you have provided me with a census, I would be more than happy to do so. So just want to touch base on what happens after the implementation of a group. So you're going to get a welcome email from, depending on which TPA you have. We have Allied and Meritain, like I touched base on earlier. It's going to include a couple of different things. It's going to include your account management, just kind of, introducing them. It'll have a list of key contacts. It'll have our account management team on it, different contacts that, maybe the TPA you're using, and things where you need to submit, where you need to find term forms and things like that. It's got a ton of information in it. It'll also have the link to the employer portal, and then a copy of the employer guide, and then it'll also give you an overview of any ads terms, where you can find your bill, and you can find a census on there and things like that. And then that will go to the agent that's writing the group, and it will also go to the employer. And just to kind of touch base on the two different portals, so Allied, just a couple of things you'll find in the Allied portal: invoices, claim summaries, reissue quotes, census report, claims fund summary report. And then with Meritain, similar things. You can check claim status, view EOBs, you can find in-network doctors and hospitals, estimate cost of services, you can compare different providers, and then you can also view your ID cards. You can do that on Allied too. They'll have like temporary ID cards in case you lose yours, or it takes usually 15 business days for you to get your actual physical ID card in the mail. So a lot of times, the brokers or the agents or the employer can go on and pull the different ID cards ahead of time so they can have that before they actually get shipped in the mail. And just kind of wrapping things up here, Ryan, I don't know if you want to touch base on this again, because I know we're kind of running short on time.
Yeah. I'd say, we could obviously just probably open it up for questions. This is really just kind of in summary, that remember what we're doing is essentially trying to give your clients an option outside of fully insured, because fully insured, as we noted earlier, it really does not have the interest of the client at heart. It's really designed to benefit the large carriers. What we're doing is providing a solution that is designed to benefit the groups, and we are in alignment with their best interest. The better job we do of managing their claims and costs, the better we all are going to do, because obviously we are the stop loss carrier on the back end. So if we don't do a good job of managing this, it's going to hit our paper on the back end, which we don't want it to do. So we're in alignment with your groups. We're going to provide a lot of control. And with us, as Jaclyn was just mentioning, on the Allied and Meritain reporting, you're going to have a lot more transparency as well. So you're going to know where your money's going, what claims look like. So that's going to help you if you do have to move a case. Obviously, we don't want you to, but you're going to have everything you need should you have to.
So just to kind of wrap everything up, just, a few reasons on, why to choose Allstate. I know we had talked briefly about, some of the things that set us outside, like covering 1099s, having flexible commissions. We do startup groups. We offer carve-outs, things like that. We do have ancillary products dental, vision, life, disability. We have the whole Allstate benefits voluntary side. We also have the supplemental products, critical illness, hospital indemnity, life, accident, and disability. We have a ton of different plan designs for, any different type of group. Like I said earlier, we have over 80,000. I know that's what it was about a year ago. I'm sure it's more than that now. It's probably up in the 100,000s now, but, anywhere from 2 to 50, we go all the way down to 2, 51 plus. I really think that there's a lot of things that we offer outside of other, level funded carriers that really kind of set us apart. So yeah, I think overall we have a full book of everything you need, and all the flexibility and products and things that we need to tailor to a specific group is really important. So just to kind of end there, we just want to thank you guys for, taking time out of your day, setting time aside to kind of, listen to some of the things Ryan and I had to say, and kind of want to open the floor up for questions if anyone does have any. If you feel more comfortable emailing either of us, I'm sure Nelson wouldn't mind, passing our emails if you don't already have them. Or if you want to take yourself off mute now and ask a question, we're definitely here to help out.
Jaclyn, we do have a couple of questions, and I'll go ahead and read them in here. The first question we have, it says, what is the PHCS?
Yeah,
you want to take that, Ryan? Or
Yep, that's cool. PHCS is the Practitioner and Ancillary Network. It's essentially a PPO network for your primary care physicians, specialists, outpatient surgeons, outpatient anesthesiologists. There's diagnostics, x-ray, lab, essentially ancillary services in there. So basically what that is the network you're going to have access to, the PPO network you're going to have access to on that core access program.
Great, thank you very much. We do have another question in here. It says, when we have issues with billing, I apologize, it's hard to read these. It says, when we have issues with billing through Allied that are not being resolved, how does Allstate help with that?
So there's a few different ways we can help. If you're having issues with Allied, I have sometimes agents reach out to me. I may not know the answer of the issues you're having, but I can definitely be proactive and get the account managers involved, because that's, kind of more of their forte, whereas, we're just implementation of new business. But, with every, TPA, you have some hiccups along the way of things that brokers don't know where to find, or, things in the Allied portal. So I know how to navigate that pretty well. So I would say reach out to me first if I don't have an answer. We also have an account management number, which is, solely for the employer and the agent. Don't hand it out to any of the employees. But you can call that number and, you can get an answer pretty quickly. It'll ask you, what your TPA is. You just select Allied or Meritain, and then you'll get an account manager on the phone who will be able to help you with any questions you have. You can also, we do have an email address that you can send questions to, or any concerns or issues. Our NGBS self-funded, which is going to be also our account management team. So if it's something less urgent, I would suggest emailing, because they usually take about 24 to 48 hours to respond back. But in terms of maybe something that's a little bit more urgent, I would get myself involved or call the account management number.
Fantastic. Looks like we have another question here, and it says, in Ohio, Allstate is only available to groups of 51 plus, or am I incorrect? And I think the correct answer on that, you can correct me if I'm wrong, no, you will do 2 to 500.
Yep. So anything
Correct.
2 to 50, Ohio is going to be myself, which is Jaclyn. Anything, and that's enrolled. And I know Ryan touched base on that earlier. So maybe the group has 80 eligible employees, but there's only 48 enrolling, it would still be worked by me. If it was anything over that, so maybe they had 82 employees, but 75 were enrolling, then that would be something that Ryan would work.
Great.
So yes, the answer, yes, we do work with 2 to 50 in the small group space in Ohio.
Great. Looks like we have another question here. It says, do the TPAs provide a paper bill or email a bill monthly to the employer without them logging into a website?
So I know with Allied, you can select, so we have online bill pay. So I believe if you select that you want to enroll in online bill pay, then your bills will be online. However, the bill is going to be with us, it's going to be the same every month. The monthly premium is going to be the same. So if you sign up with online bill pay, you can either sign up to where you can set it up to where it pulls monthly, every month automatically. So our groups don't have to worry about it. You can also do the same thing with Meritain. You can set up ACH in the beginning. If you don't sign up with bill pay or ACH, I believe they email a bill. Ryan, are you? I don't want to say for sure because I don't ever see that side of things, but I just want to make sure.
Right. Yeah. Jaclyn and I don't typically see what the billing side of it looks like, and I think most groups nowadays just do the online portal, the billing. But I believe they do send at least, if they don't send the actual invoice in the email, I think they may send a notice that you need to log into your account and you have an invoice in there. So it's one of the two. And we could check. I'm not positive if they still have an actual mail service that they provide. Essentially what happens is you just select whatever you're going to do, you would select it during the implementation process, however you want the billing set up. But if we could do that as a takeaway just to see if an actual, if you wanted to get a bill mailed, could we do that? We can ask that question.
Okay.
We would have to rope our account manager team in too with that. Sorry, go ahead, Nelson.
No, I interrupted you. It looks like we do have another question here. It says, who handles compliance?
Who handles compliance? And I guess I'd have to, in what kind of, I guess, context of what, I guess I'd have to know a little bit more about that question to try to answer it, I think, accurately.
If they could elaborate a bit on what they mean by who handles compliance.
Okay. Another question that says, is the product a level funded arrangement, or is it truly a self-funded arrangement on both the 2 to 50 and the over 51 marketplace?
It's actually, that's a great question. I don't think we really got into that, so I'm glad that someone asked that question. In the 2 to 50 space, it's all going to be level funded. In the 51 plus space, it can be level funded or classic self-funded. So we can do either or in the 51 plus space.
Okay. Fantastic. I think we are about out of time here. I think we've gotten to the questions and everything, but if you have other questions that come out, please feel free to reach out to your Cornerstone representative, and we will be able to get those questions answered for you. Everybody, have a great day. Thank you for your time.
Thanks, everyone.
Thank you.